Hi everyone. Today we're diving straight into the data to spot where the next opportunities are forming. You're about to see over 250 ETFs, categorized and structured in clear groups to help you see the big picture without the noise. Feel free to pause and analyze any group in detail. This table shows every ETF we track, updated daily. Two numbers matter most: drawdown and recovery. Drawdown tells you how far an ETF has fallen from its highest point in the last year. Recovery tells you how far it has climbed from its lowest point in the last year. These two numbers together tell you exactly where we are, between the peak and the trough. Who is this system for? It works best for two types of people: those with a regular cash flow who can deploy capital whenever the market offers a window, and those with savings they cannot afford to lose. Patient investors who are in no rush. Now, how do you use this? When you make your first entry into an ETF, note both numbers, the drawdown level and the recovery level at that moment. Those are your reference points. From that point on, every day you check the table, you're asking one question: has the ETF made a significant new low since my last entry? We aren't looking for tiny fluctuations. You are looking for a meaningful drop, typically between 3 to 8% below your last entry price, depending on your personal strategy. If yes, that's a potential new entry point. Small, disciplined, at a lower price than before. You're not waiting for the bottom. You're building slowly, in stages, as the price moves in your favor. Two situations where you might consider adding. First, the ETF is pulling back into a deep correction. Drawdown is growing. Each significant new low is a potential entry. Second, the ETF is making new highs, but still pulling back within that uptrend. Recovery is growing. New peaks are forming. Those pullbacks, while the trend is intact, can also be entry points. This second approach is more aggressive. The first is more cautious. But remember, there is no such thing as a guaranteed bottom. Even the deepest dip can go lower. One more thing before we go further. Not every ETF is worth accumulating. ETFs with strong long-term track records and proven structural trends can be built gradually on pullbacks. Weaker, stagnant ETFs are different. For those, you want to wait for a real bottom, not just a dip. Accumulating into a fundamentally weak or sideways trend is not opportunity. It can be a long test of patience that turns into a trap. For standard ETFs, consider up to 20 separate entries, each at a lower price than the last. To maintain true discipline, treat each entry as one part of a larger machine, ideally aiming for a diversified portfolio of at least 20 different ETFs. This means dividing your total intended capital into 400 or even 800 small slices. After 20 entries, raise your threshold. Wait for a significantly deeper pullback, around 20% below your last entry, before considering more. After that, each additional 10% drop can be a new evaluation point. For high volatility or leveraged ETFs, the thresholds must scale with the movement. A 3 times leveraged ETF needs roughly 3 times the pullback before you consider entry. Where a 5% drop might be enough for QQQ, you'd want closer to a 15% significant drop for TQQ. Because these move fast in both directions, consider scaling out and taking profits just as systematically as you scaled in. Total exposure in any single ETF, no more than 5% of your portfolio. And from the very beginning, spread across multiple ETFs. Don't wait to finish one before starting another. Opportunities are everywhere, all the time. Every decision is yours. This is a framework, not financial advice, adapted to your own situation and risk tolerance. We track nearly 300 ETFs every single day. Every pullback, every recovery, every opportunity the market creates. Not to predict, but to be ready. You can't time the bottom, but if you enter small, spread across many levels, you're never fully wrong, and you're never wiped out. This week proved that better than any theory could. If that approach makes sense to you, subscribe. We publish daily. Small positions, multiple entries. Keep your powder dry. Stay safe, stay steady.